a little bit more in the sense of overall in the financing space, we're definitely customizable to our clients. We don't focus as much on tax return numbers. We have a system that reads their bank statements directly. So we're able to analyze their cash inflow and outflow based off of what they're bringing in from their customers. We do see the banks tightening up, so I do see us as a source for maybe some stronger clients for us as well, some bigger clients for us.
Welcome to Business Ninjas, brought to you by WriteForMe, where you'll hear from business leaders who are out there growing their business and slaying it every day. Learn from the masters. Let's get started.
Hi, and welcome to another episode of Business Ninjas. I'm here today with Natasha Dillon, Chief Financial Officer at FundFi Merchant Funding. Natasha, how are you today?
I'm well, thank you. How are you?
I'm pretty good, thank you. I appreciate you spending some time with us on Business Ninjas. Please tell us a bit about yourself and about FundFi Merchant Funding.
Sure. So FundFi, we've been in business for, this will be our 5th year. Myself, have been in the industry for over 10 years. We do specialized financing for small to mid-sized businesses across the US and Canada. We've been working in Canada for exactly a year. We've just actually had our 1-year anniversary in Canada. So it's exciting for us. And we provide financing to businesses that either choose not to go to a traditional bank or don't qualify for a traditional bank. And we provide different options for them to be able to grow, expand, get working capital for their current businesses.
Excellent. And what's your background? How did you end up in this industry?
So I've always been in finance. That's kind of been my career from the beginning. It's been a little bit of a windy road to get to specialty finance, but basically I worked in investment banking, went back to grad school, came out, was doing chief financial officer work at a different type of company, and got back into consulting and really saw that most of my clients, while management consulting and reorg was important to them, they really were looking for financing, and that was their kind of immediate need, I should say. So I learned about specialty financing by just connecting with different providers, and then eventually got linked up with a company and started working in the space myself.
A delicate question. When we talk about specialty financing and you're saying they may not qualify for some of the larger lending institutions, is this higher risk on your side of the fence?
Yeah, absolutely. So and it's all private money. So yes, we are, when we say higher risk, I guess we're a little bit more flexible with any type of blemishes that a bank may not be so forgiving about. We'll say a tax lien from 10 years ago, we're a little bit more lenient on that. Other types of blemishes that you may see that a bank may not be. But in addition to that, banks are tight during certain periods of economic hardships for various reasons that may have absolutely nothing to do with our client at all. So they may be not lending because they're not getting their deposits at their bank. So it just has nothing to do with the credibility of the borrower. So we come in and we provide that. We also don't focus as much on, I'm getting a little technical, but we don't focus as much on tax return numbers. We have a system that reads their bank statements directly. So we're able to analyze their cash inflow and outflow based off of what they're bringing in from their customers, and then what outflow is going to debt versus to growth, which we're not as much of an issue with. We're also not taking into consideration any sort of depreciation they may be writing off on a tax return, those sorts of items that a bank is a little bit stricter on. Sorry, did you have another?
I was going to say that makes a lot of sense to me, because when you're just looking at a single tax return, people can tend to be a little bit artistic then and there, and that's really a snapshot of a moment, and might be a big arc, but it doesn't give you granular monthly sort of information like you're aggregating. That makes a lot of sense.
Yeah, and we're taking with those statements, in addition to all the other things I mentioned, we're also taking into consideration their seasonality. So they may be going into a busy season, they may be going into a slow season. I'll give you a great example. We get tons of CPAs coming to us around this time. So, their banks may look really great right now because they just had the 3 months of all their work. Obviously, we're not looking into the future of seeing that their months are going to be great through the summer. So that's a more negative effect. Where on the other end, we have like landscapers in the Northeast. They're going into their busy season. So we take that into consideration as well. I was also going to just say about the banks. I just had a meeting with one of the big banks. We tend to just discuss certain things amongst, some of the C-level folks, and they're tightening up in the sense of they used to be a lot more lenient. Also, rates have something to do with it. So their rates that they are tied to, they would have been able to give higher proceeds to certain clients. Now that's obviously affecting them. But in addition to that, they've just changed their blanket rule across the board, where they used to lend 50% of a client's income. Now they're down to 25%. No reason, no particular client they're looking at, no particular industry they're looking at. We get a little bit more granular because we are also much smaller. We're able to see, we're looking at a client just personalized. We're also looking at an industry personalized. So it's a little bit we're not making a broad statement across the board on most cases. We do in some cases, but not in all.
Well, I mean, it's the old line: to get a loan from a bank, you got to prove you don't need it. And it's for most people, it's a very frustrating process, right?
Yeah.
You scratch the surface of verticals you service. What sort of size companies and what verticals are you servicing at FundFi?
Yeah, so we do have a large range, but it sort of falls into that small, mid-sized business. So, I would say any business that's doing over 20,000 a month, we will look at. Anything smaller than that's just not our size. We are also looking at customers that are doing 5-10 million a month as well. So we're seeing anything across the board. Our dollar amount that we lend is anywhere from we have gone down to 10,000, but I would say probably 20,000, and our top line is usually about 600,000. So anywhere in that range.
Okay. And what differentiates FundFi from your competitors? What makes you stand out?
From our direct competitors versus the banks, yeah. So our direct competitors, I mean, we all have our own pricing models. We all have our own risk tolerance. So I would say we're all pricing based off of what falls in line with our philosophy. I would say we're a little bit more in the sense of overall in the financing space, we're definitely customizable to our clients. That's been a big part of our growth. My business partner and I have been working together for 8 years now, and he's on the sales side, I'm on the back end side. So we've always been really good about, sort of communicating how we're going to take care of our clients when it comes to pricing. And then when it comes to going forward, a big part of our business is renewables. So that's, very important to us.
Of course. You said you've been around for about 5 years, which puts you squarely in the crosshairs of COVID. What was the timing like launching your business? When was that?
Yeah, during COVID, we launched August 2020. Like I said, my partner and I were working together with another company. We had somewhat of a partnership arrangement at the other company. We just had philosophy differences. Him and I were in agreement, and we chose to start the brand that we have now.
Gotcha. And talk about the challenges and opportunities, especially small businesses they were laid waste, a good percentage of them. And I'm sure once the PPP funds came out, they came knocking at your door. Tell me about launching and sustaining a business like yours during the beginning of COVID.
Yeah, so we've never gotten involved in brokering out, and that works alongside, some of our businesses that is funding companies that are like ours. We don't really do that. And then also we never got involved in getting PPP money or getting EIDL money for our clients. We sort of let our brokers do that. So I can talk about that as well. We're all broker based. All of our clients come from brokers. So they're, essentially their client to get that type of program for them. And a lot of them utilize that. A lot of them, I mean, they would be silly not to utilize the PPP and the EDIL. So yeah, there's a lot of cash flow coming in for folks. So, we saw a lot of clients not come to us because they were flush with free cash or low interest cash. And then we saw a lot of people, still come to us and grow even more. I mean, we're always looking to the future. We're always looking to grow with our clients and seeing what they're using the funds for. Does it make sense? If they're trying to just stop a hole, what's their plan to get out of that? Those are sorts of things that we really dig into on our underwriting. But as far as what happened during COVID, there was a lot of things happening, right? So we were able, because we were coming in, we had a book of business, but we were able to, because it was COVID, to really look at what is their business doing. Is it COVID protected, meaning like, are they a cleaning company or are they a restaurant? Those sorts of things. We got to sort of cherry pick and choose who we wanted to lend to. And then obviously that's evolved over time. Now we're 2025 and, restaurants are great businesses and they would be hurt by another COVID, obviously, but that's something that we will deal with if that comes up. But there's a lot of businesses that, kind of never recovered during that time. And, we were trying to figure that out alongside them, and everybody was trying to figure it out. I will say, I think a lot of businesses, if like, a business is a business, if you don't manage your money properly, you're not going to do well, regardless of the time of that business. And there's other reasons that a business won't do well, whether it's in their control or not. COVID and all of this money flying around, you can really take advantage of that and do really well for yourself and grow, or you could just take the money and buy personal items and then have to pay back your debt at some later time. So those sorts of things, are things we look at. Obviously, if they have a SBA default on their background check nowadays, we don't lend to them. So
Yeah, you may be slightly higher risk than the large banks, but you're also not in.
Yes, yes, we're I would say we're fairly strict within our space, or we do require a lot of documentation for reasons that you mentioned before. It is higher risk.
Gotcha. Switch gears to the marketing side of things. How have you told your story? What role has content played in the growth of FundFi?
Yeah, so our business has been solely broker based. It sort of always has been since the beginning of even my career, really in this space. So that's been a different approach than probably most businesses have, where they're going out to the market, meaning like Google and social media and that sort of thing. It hasn't been a big player for us. We really started exploring it when we launched into Canada as a way to potentially grow our base there. That also has remarkably been a broker-based market for us, but there's a lot of potential there for us to expand and to grow and connect with clients up there on a one-to-one basis. US is just a completely different market, and really a lot of our brokers that we have relationships with, they already have a lot of clients that we handle and that we work with them. So it's not really a avenue for us that we've partaken in up to this point.
Gotcha. Well, what's next for FundFi? Look down the road a year from now. What are some things you'd like to be celebrating personally and professionally?
Yeah, I think this year is going to be a very strong year for our industry, in the sense that banks are tightening up significantly, and for businesses, both the US, Canada, lots of things are constantly changing. I don't know another way to say it, but we will find out what tomorrow brings. I mean, it's it's a fun experience working in both countries, and sort of figuring out where not only what we're doing and how this is affecting us, but we have to think about how it affects essentially every industry in Canada, how it affects every industry in the US, because we have clients in essentially every industry. So it's a interesting time. I don't think it's a scary time. I never really think of it that way. And we do see, like I said, the bank's tightening up. So I do see us as a source for maybe some stronger clients for us as well, some bigger clients for us. So that's something we're kind of gearing up for and preparing for. We've expanded our credit facility with our bank, our line of credit. So we're really prepared for what this year is going to bring for us as far as bringing on new clients.
Well, that's a very kinder, gentler way of describing very fluid situation. Let's call it that. How's that? All right. So please tell us, what's your URL? Where can people find FundFi Merchant Funding, and what social media outlets do you use as well?
Yeah, so FundFiMerchantFunding.com is our website. Very long, but we're very active on LinkedIn. Is probably our best source. We're on Instagram as well, and posting some of our deals that we work towards and some other kind of highlights for us. But I would say, for any direct clients looking to get in touch, they can reach us on our website, and we will always work with direct clients if they come to us, and then brokers, obviously, same as well. They can contact us through our website as well.
Excellent. Natasha Dillon, continued success at FundFi Merchant Funding. All the best to you and yours, and thank you for spending some time with us on Business Ninjas.
Thank you.
My pleasure.